Yeah. So give me the message one more time. Give it to me real quick. What do you got?
So here's what we saw with July data. Overall, we're still in a strong seller's market.
Mhm.
We saw fewer homes sold compared to the month prior due to two things: seasonal factors and limited supply, very limited supply. The saturation rate, however, is lower now with 1.1 months of inventory currently available compared to 0.75 months of inventory over the past couple of months. But this still 1.1 months of supply is still an indication of a very quick market, right? A market
Yep.
with a lot of demand. So as we look at the charts, you can see that homes sold did go down. You scroll all the way back to the left, you can see that, last year in July, things started to go down for the year. So it's just the annual up and down that happens with seasonality. A little more of a drop off this month of July, but again, it's because we know that there was very short supply. Actually, we see more supply now this month in August. So we think that we might actually have a bigger month in August as a result.
Yeah, I agree.
Indicator of the level of demand that's in the market, and that's our first graph here to show that is list price versus sold price. Again, we extended this graph backwards just so you can see the annual kind of up and down that occurs. Couple of notable things here. Number one, the orange line is still above the blue line, meaning the sold price is still going above the list price. And you can see the distance between sold and list is about the same for the last 3 months. The gap between those lines is the same, which again indicates that there's enough competition that people are willing to bid above asking, highest and best situations and all the rest of it to get that number to go above the average list price. The other notable thing here is, even though we're kind of getting over the hump in terms of the summer busy season, you can see that this season is higher than last season. So this July at 381,431 for the average sold price is 4.4% higher than last July. So again, good indicator that there's a lot of demand there. The over and under asking price, really strong here. You can see that 26% went 5% above or more. And you can see that it was only 13% of homes sold that went 5% or more below. So twice as many went above compared to below, indicating strength. And then the other big one, days on market. You can see that this is actually the lowest days on market at 16 for this year, right? And median days on market held steady at 5, which is consistent really pretty much since March. So again, very, very quick moving inventory. And then the last piece is the price reductions. So a very small number had to reduce their price before selling. That was just 15%, which is consistent for the last 3 months since things have bottomed out.
So the news snapshot is we did reduce number of homes sold and the average sales price, but that's consistent with our seasonal trends. Year over year, if you look back a little further, we're still well above what they were going for this time last year. Sellers are in the green. Sellers are still ahead of where they would have been this time last year. We expect this trend to continue. I don't see why not. We have a crazy throttle or supply chain because of the interest rates, which are hovering right around that upper sixes. Is that right? 6.5% to 7%. That's throttling supply, keeping demand up. Prices go up on the whole year over year. And they're going to continue to do so until something changes. And I don't know what that'll be.
So I guess one of the other observations here, and no one can really predict the future, right? But what we're seeing evidence of here is that there is more demand than supply, right? We just went through that and showed a number of different indicators for that. If you think about the kind of thing that would allow more supply to come on the market, one would be, if rates came down a bit, right? So if we start to see rates turn a corner and start to come back down in the sixes, low sixes, 5%, right? I think that brings a lot more inventory to the market, but again, it also brings a matching level of demand.
Yep.
And what's important about this is there are some people that are trying to wait out this market. They're trying to wait until the crash happens or until things bottom, which who knows what's going to happen. But right now, what we're seeing a lot of evidence of is, the Columbus market, the greater Columbus market is not the national market. We're a growing market. We have limited supply to satisfy all the demand. And there's not really good indicators that that's going to change anytime real soon. So the fundamentals of supply and demand are going to continue to drive this. And I think it's realistic to think that, next year, maybe rates come down. But you can see that this year, compared to last year, we're up 4.4%. If we go up another 4.4% next year, what does that say? I know that people look at affordability because of the rate, but I think people also need to be factoring what's the risk of this continued rise in values. Because if you wait a year to get 1% lower rate, but you're paying a 4.4% higher sales price, the math on that may not be as good or advantageous as you think, right?
Yeah. Yeah.
And if you get in now, you can always refinance later. But I just think not everything's being equal in some of the calculus that people are doing.
No, that's absolutely right. I saw someone on a social feed, one of my socials the other day, saying, how can we afford to move? We want to move. And then another realtor, because I have a lot of friends that are realtors, said, if you wait, the prices are going to go up on you. And there's going to be way more buyers when the rate comes down. That's absolutely true. That's right. It sounded very salesy at the time. It's true. The prices are going to go higher. The rate's going to do whatever it's going to do, whether you're in a house or not. So it's one of those where I understand the affordability factor with the rate coming into play. You can change that later. The price is going to go up. That's just how it is. Under what scenario can you imagine? So ideally, this person's waiting for the rate to stay the same and the prices to come down $100,000, right? This is where we were 10 years ago. It's $100,000 difference, okay? What scenario would happen where the prices come down that much? A huge crash, and you got way worse problems than whether or not you are a homeowner or not, right? Okay, so if we're planning on the future, we can predict something that's stable. Hopefully that turns out to be the case. Prices are going to go up. That's just how it is. Even during the height of the 2008 recession, I'm not sure prices came down to $100,000. I don't think that was the case. But at the time, you got to remember, they weren't anywhere near the pricing now. A $300,000 house now in Hilliard, for example, was a $100,000 house back then. So it didn't go to zero. They always have their value, right? And now it's worth 300. So I know there's improvements factored in there, and there's a lot of limited supply, especially at the lower price points. But that's the reality of the situation. They're not going back to 100. So I don't think it's a smart move to wait. It's a different story if you have a house to sell and you're trying to figure out affordability. Obviously, that changes the calculus a little bit. But if you're not a homeowner and you're trying to get in the game, if you can afford to, you need to, and then figure the rest out later. So hearing that advice sometimes sounds very salesy. It's also true. So that's a tough line that we have to walk, Tell people the truth or tell them what they want to hear.
Yeah, but I think that this is the whole reason we do it this way. Is this isn't just our opinion based on what we heard at the last meetup with all the local realtors, right? This is what we're seeing across the entire, Central Ohio market. We're trying to really understand what are the drivers of both supply, the drivers of demand, and really try and understand what are the weights of those things relative to one another and what's a realistic assumption to make. And there's ample evidence even still. Think about it. Think about how much things have changed in the last year and how terrified people were about what was going to happen at this time last year when the rates started to go up and weren't stopping. And people said there's going to be a crash. We're not going to be selling anything. And here we are, we're down year over year. But things are still moving. And the thing that's not down is price. It's not sales at this point. It's just advice based in good evidence that we have.
Yeah. It's just a matter of if you can do it, if you're willing to take that leap. So obviously we're homeowners, so we don't have to worry about that as much. But for our friends that aren't, get in the game. You got to do something because it gets worse.
Right.
Rates could come down. We don't have any control over rates. We don't have any way to predict that. Global markets, the Fed, any number of factors come into play that don't have anything to do with housing. So what we do know is that there's limited supply in Columbus. It doesn't seem to be getting better anytime soon. There's a lot of growth projected, but those aren't affordable houses that are coming on the market.
Right.
Whatever comes around the Intel plant whatever growth comes around Google and Amazon there, they're not going to be cheap for sure. That's where we are. It's tough to, it's still a very competitive market. We'll say it that way. But the good news is if you are moving up, moving around, if you're currently a homeowner, you can cash out more than you would have at any time in the past and move that over to your next house. So shouldn't be as big of a hit. I know that rates are still an affordability factor, but that your equity is in play also. That's it. I think that's the only message we can say.
Yeah.
Everyone knows that this is the case, so we'll just see. Okay, so I think we did a lot better this time than last time. What do you think?
I think you did a lot better.
Okay, great. You think you're always doing?
It's on the same level.
You think you're all on the same level?
Yep.
That's fair, yeah.